We also have Dipan Mehta on the show right now. Dipan, hi, morning. Good to be speaking with you. Firstly, Dipan, wanted to have your take on some of these crude sensitive counters and sectors rather, given the fact that the crude has cooled off from those elevated levels, and once we see such a spike, all these reports keep flowing in with a target over $100 per barrel mark, but it's a bit of a reverse that the price movement is showing right now. Help us understand that which sectors do you believe can offer an opportunity in the Indian markets where you also have a valuation comfort?
Good morning and thank you for having me on your show. No, I think crude has not had much of an impact. It's rallying also because of the Iran-Israel skirmishes, and that subsequent correction has not had a material impact on any of the stock price movements. I think investors do not feel that that's a major threat or a major benefit for any particular sector. And gradually over time, I think the importance of crude, its impact on inflation, its impact on material prices in India is reducing, and focus is elsewhere on the commodities, like we saw with the case of rare metals. And now I think even copper, aluminum prices also make as much of an impact as crude oil prices. So I'm not that much put up about crude oil volatility. End of the day, I don't think it's going to have a material impact on any of the consumers or the producing companies.
Okay, so that's on crude, but Dipan, hi, morning. What are you making of the entire market breadth right now, given the kind of fall from the day's high we've seen in Nifty yesterday, but Nifty Bank and the broader markets, they continue to be resilient. Do you believe that a similar trading setup could continue for the near term?
I think so. I think that broadly markets are showing sideways movement. On the liquidity front, the supply is matching the demand. That is one thing which I can kind of assess over there. Secondly, I think 9 July is a major event for the markets. It's just about, I think, 2 or 3 weeks away or so. And that's the time when the pause which President Trump has announced, the 90-day pause, gets over. And then what happens after that is important. Is it going to be extended, or is there going to be the reimposition, or are we going to have any trade deals? I think that will determine the sentiment from 9 July onwards. Apart from that, I think pretty much I think we are in a low news flow situation. The earnings are out of the way. We know that the monsoon is doing well. RBI's interest rate has come through, and we have seen also that tax cuts have had an impact on the tax collection. At the same time, it certainly has improved urban and rural consumption. So by and large, I think the domestic fundamentals are gradually improving. Although I was disappointed with the direct tax collection on the corporate front, that does show that maybe earnings are slowing down, but let's see. And the biggest event in the market now still remains the 9th of July, what happens on the Trump tariffs.
All right, yes, indeed, 9th of July is the date to watch out for. And we'll also track that how these sensitive sectors, be it some of these export-related sectors from pharma to metals, how they react going ahead with this particular date. But moving on, let's put the spotlight on one of the metal counters then. And Hindalco is set to acquire Aluchem companies for an enterprise value of $125 million. The Aluchem acquisition will be carried out through Aditya Holdings, which is a step-down wholly owned subsidiary of Hindalco. My colleague Ashesha is here with all the details. Ashesha?
Well, yes, Hindalco has announced an acquisition. It's a 1,000 crore acquisition, not a very big one in terms of the size of the company, but a strategically important one, says the company. Hindalco said that it will be acquiring 100% equity stake in US-based Aluchem Companies Inc. Now, the acquisition is likely to be completed by the end of the next quarter, and it's a $125 million acquisition, which translates to about 1,080 odd crores in Indian rupees. Now, this company, remember, is a prominent manufacturer of specialty alumina, and the company says, Hindalco says, it marks significant investment in specialty alumina for Hindalco company, and it also says that it marks key step in scaling its high-value technology-led materials portfolio. So, if we consider the size of the company, the acquisition is not very big, but it marks its entry into the North American region. In fact, they also say that Hindalco currently operates about 500,000 tons of specialty alumina capacity. It plans to scale it up to 1 million tons by 2030. Some important management commentary that has come in from Kumar Mangalam Birla as well, who is the chairman of Aditya Birla Group, where he said that this is a strategic foray into the specialty alumina space, and this will not only accelerate the development of future trade sustainable solutions, but it will also open pathways to the company for exploring further in this particular segment. So yes, 1,000 crore acquisition that has been done by Hindalco, the company in focus on the back of that.
Okay, Shesha, thanks for bringing us all of those details about Hindalco's latest acquisition plan. And Sharan, give us a chart check on Hindalco. What are you making of this stock and even the overall metals pack? Given Nifty Metal was the second top sectoral gainer yesterday, we've seen some resilience come back when it comes to some of these metal counters. Or are you liking anything from this space?
So Hindalco has a small resistance around 685 levels. It's downward descending trend line resistance around 680 to 85 levels. If it consolidates there and gives a nice breakout, it will be a change of trend towards a positive trend. Till then, I would suggest if someone wants to accumulate, they can do a buy on dip strategy with a stop loss around 20-day moving average around 650 odd levels. But the breakout will come only above 685 levels, which can actually take the stock to its all-time high or retest its all-time high around 770 levels. And in terms of space, generally after all these geopolitical issues and when the market opens, you see a lot of movement in copper towards the upside. So if anyone wants to concentrate in the metal space, I am liking Hindustan Copper and National Aluminium. I will not give the specific levels, but these two stocks can make a good comeback in the coming week.
All right, let's watch out for these counters and Hindalco in focus. Today is one of the newsmakers. But other than that, all eyes will be on Coforge as well, because Motilal Oswal did come out with a note on this one where they are reiterating their buy stance on this counter with a target price of 2,200 rupees, while they say that the executable order book for the company for FY26 stands solid at this point in time. The margin is set to expand too, with one-offs that are now behind the company, and along with that the company has reiterated their FY27 revenue guidance, and the margin outlook is constructive as per Motilal Oswal, and along with that the management expects organic growth in FY26 to outpace the FY25 levels. So that's about Coforge. We will, Sharan, we'll get a technical check from you, but before that, Dipan, I wanted to have your take on not just Coforge but the overall mid-cap IT space, because just yesterday we have seen comments coming in from KPIT Tech. They were sounding actually cautious on the growth outlook ahead, while Coforge for now, they are retaining some of their guidance that was given earlier. How do you see the mid-cap IT space flaring at this point in time and the demand environment?
I think the going is very tough for software services companies. And we have seen that over the last 25 years, there have been hardly any transition from one technology to another and to another, but the basic business remains the same, that developing and maintaining applications for corporates. None of the Indian IT companies have gone on to become great platform players or great technology companies with products which delight the customer. So I'm very bearish on the entire software services industry. There could be a few companies within the mid-cap space, like Persistent Systems is there, or to an extent Coforge is there, which are delivering superior growth rates because they are focusing on a particular vertical or because of their client concentration. But by and large, the entire industry now is in a slow growth zone, and investors really need to get out of it, just as they did out of FMCG. So my view on tech companies, software service companies is very negative, but there could be a handful of new generation software companies which may do well, platform companies like there is Sagility, or there is Orion Pro, there is Ismo, and there are other such smaller companies. There's New Gen Tech also, which have a slightly differentiated business model. There's Oracle also, but there the earnings are quite volatile. So we need to look for new business models within the software space. The existing companies are just not going to deliver great returns or value creation going forward.
Dipan bhai, good morning. How are things?
No, things are great. Thank you very much for having me on your show.
Now, the point is, what does one do in today's world, Dipan bhai, when everything is now getting indirectly or directly impacted by AI? So we know that AI is tech-enabled. And yet in India, we are struggling to find a single company which would be either giving AI as a service or would be giving AI as a solution. I mean, how ironical is that? AI is disrupting everything, and in India, as investors, there are very little AI companies is available. What are your thoughts on this?
Yeah, I think it's disappointing. As I said, that the Indian software services companies are just too focused on providing support services to Fortune 500 companies. They do not have the aspiration to build products or services, which go direct to customer or really high-tech, path-breaking technologies. Like, why don't we have an AI engine like DeepSeek? I mean, that's really surprising that nobody has thought of developing that. But I think that's the pressure that is coming from their investors who are short-sighted and just want these companies to deliver steady. First, it was high teen growth, then it came to 10-12%, and now the growth rates have come to high single digit. And they're happy with it. I mean, if you look at Accenture's statement of the CEO, he says that it was a great quarter for them, and the quarter growth rate was just 7%. I mean, as an investor, how can you have a great quarter when there's a 7% growth rate? And that's true across Indian IT services companies. You look at any of the management releases of the top companies, 2-3% also type of a quarter-on-quarter growth, and the CEOs are patting themselves on the back. So I'm very disappointed with the sector as a whole. It's been a great wealth creator for me personally, but the way these companies are performing just now, and I don't see any ray of hope that these companies can go back to 13-14% type of growth rate, which is the minimum required threshold to get decent returns on your portfolio. So we are looking out for new stories, and there could be a few platform companies, there are a few ad tech companies, there are a few travel tech companies like RateGain is there, and then there is Zaggle Prepaid. These are all expensive, but at least they are tech companies with a difference.
So what is not expensive and still growing, and it is fairly priced or reasonably priced across the board, not just tech, Dipan?
Oh, that's a difficult one to answer, Nikunj, because there are not so many pockets of cheap valuation. As a sector, I think that banks, NBFCs still offer the best risk-return profile, but it's becoming more and more of a red ocean. It is getting cyclical as well. But we are looking at a nice upcycle in the NBFC space, so you could write that. But by and large, I think it's getting extremely difficult. At the same time, I think within sectors also, there's a lot of disparity in growth rates, and same companies, similar companies are showing different types of growth rates. And on the whole, also, there are many positive investment trends, like investment in capital goods. Within that, there is renewable, which is distribution, as well as renewable equipment. And then there is the banking NBFCs. There are retail companies also. I thought a lot of specialty retail companies came with good set of numbers. Cement is looking up. But on the whole, I think there's nothing which is so attractive at this point of time, which is available at reasonable valuations and still show some growth rates. So we are also searching for new ideas. But let's see, something or the other will definitely crop up.
Okay, so that's the take on some of those counters. But let's move away from that for a bit. Let's talk about the consumption space, and particularly let's talk about Titan today, because Macquarie has come out with a note on Titan today, wherein they're very bullish on the stock. They maintain an outperform rating with a target price of 4,150 rupees, significantly higher from where the stock is trading right now. They believe that there's healthy demand, and that is going to be aiding Q1 jewelry growth. And this healthy demand persists despite the elevation that we've seen recently in gold prices. They also believe that the jewelry EBIT margins have bottomed in FY25, and this year 20% EBIT and sales growth when it comes to their jewelry segment. But if you talk about lab-grown diamonds, they believe that the adoption pace of lab-grown diamonds in India could be dented if the GIA new certification changes are adopted by players. On the back of that, they're also seeing demand recovery in mined diamonds, which is a segment that Titan plays in, and they're hopeful of steady product mix and improvement going ahead. They're confident of the 11 to 11.5% FY26 jewelry EBIT margin guidance that Titan has given. Macquarie is confident of Titan meeting this target. So all in all, very positive note coming in from Macquarie on Titan this morning. We'll see how the stock performs at market open. But Sharan, what are you making of Titan on the charts? Are you seeing any positivity?
Yeah, definitely the chart has made a bullish pole and flag pattern, and Titan actually tried to give a breakout from the descending trend line yesterday. But I think because of this geopolitical news, it also corrected. But if it continues its upward movement, I see the stock going to 3650 levels. And around that time, if it consolidates and breaks out again, it can touch 3750 and actually its previous swing high of around 3850 levels. So overall, the stock looks positive on technical terms.
Just been one of those stocks where you would say that irrespective of what price you bought in the last 15 years, whether it was the change of the company in terms of becoming from a watch company to a jewelry company and now adding more brands, or it really could be this sheer cash flow which they've generated, I think the run-up has been quite extraordinary. Dipan, I'll just stretch this timeline of this question. And we just celebrated our 16th anniversary. And I looked at stocks in 16 years which have been the outliers. It's been Trent, Bajaj Finance, Indigo, a long list of companies. Which are some of the companies which you think in next 5 to 7 or even 10 years have potential to grow at 15%? I mean, if they grow at 15%, markets will start recognizing the value of these businesses and they may just end up becoming outperformers. So which are 2, 3, 4 companies, Dipan, where you say, okay, I'm happy to own them because I'm not buying stocks, I'm buying these lovely businesses?
Yeah, well, that's again a difficult one to answer. Within the large cap space, I think there are hardly any companies, in the Nifty, which have the potential to grow at 15% plus. You could look, to that list, you could include maybe a Bajaj Finance for one, then Bharti Airtel, to an extent, L&T. I think these 3 companies come to mind where their growth rates can be the 15% plus. Maybe an M&M to an extent, Eicher Motors. I think within the Nifty companies, 5 or 6 companies I think have the potential to grow at 15%. The rest I'm not so sure. In the mid-cap space, I think there are many companies which are growing at 15% plus. Look at all the defense companies, look at some of the capital goods companies, some of the renewable energy equipment manufacturers, the power distribution companies. There are many businesses within the mid-cap, small-cap space which have the potential to grow at 15%. But the irony is that these businesses, the PEG is more than 3 times, almost 4 times. So if you have a company which has got reasonable corporate governance standards, high ROE, 15% long-term growth, it is easily trading at 60 times plus trailing 12 month. And at those valuations, I'm not sure that you will get superlative returns. You may get returns in line with what the earnings growth is, but then, that's not going to really move the needle too much in terms of wealth creation. So it is a bit challenging at this point of time. And one needs to get, more and more granular and bottom up. I think that the next 12 months is going to really be a stock pickers market, and the entire situation will get very, very selective, and it'll be tough to kind of generate great returns. Last 4 years were fantastic across the board. All stocks did well. I think things are gradually changing as we have seen in the past 2-3 months, especially in the quarterly results which went by.
Okay, fantastic. Sharon, I'll throw another outlier here. I particularly like this one with the disclosure that, I've tracked State Bank of India for years now. Technically, how's that one looking? Is this tiger getting ready to roar?
Sorry, Nikunj.
State Bank of India, State Bank of SBI.
So again, it's consolidating around the 200-day moving average. So I don't see any kind of big accumulation looking at the volumes. But definitely, if it breaks out around 825 odd levels, I think you could see a trend change in the stock. But looking at the whole PSU back, Nikunj, it holds around, I think, 49% weightage in the sector. And the whole Nifty PSU bank index is looking very good. So I think maybe on back of that, it takes a sharp movement on the upside and breaks out around 825. But currently, I don't see any good accumulation in the stock. I think it can consolidate between, 770 to 825 odd levels before making a strong move on the upside.
All right, so that's about SPI. But Sharan, also help us with a chart check on the other counter, that is DMart, because just a few days back we had the announcement of a new store opening in Uttar Pradesh. The stock was very excited then, and today we have another news flow suggesting that the company has opened a new store in Tamil Nadu. Give us some sense that how is the stock technically placed?
So, Shrishti, in the last 6 months, if you look at the chart, there's been huge days of huge accumulation from Jan till June. And now, actually, the stock has changed its direction. It started moving above the 200-day EMA. And this looks like a trend change from a downward to consolidate to the upward journey. So, if the stock moves around, I think 4,500 levels, which I think it will, given the accumulation seen in the stock, a move above 4,500 will actually take the stock back to its all-time high around 5,500 level. So even for the viewers, I think if anyone wants, it's a very good company. You can create a buy on dip strategy with a stop loss around 200-day, around 4,000 odd levels on a daily closing basis. This looks like a good long-term pick also. So make a buy on dip or a SIP strategy. Best move will come around above 4,500 levels. So you have a good time between 4,000 and 4,500 odd levels to accumulate the stock also.
Okay, so that's the take on Avenue. We have the market pre-open rates on the screen, 25,000 thereabouts on the Nifty. We'll give those rates some time to settle. But Sharan, where are you placing your mid-cap bet this morning? From that end of the market, what's looking attractive?
So ICICI Lombard is my mid-cap bet. It looks very good on the charts, strong accumulation seen over the last 6 months. So you can actually buy ICICI Lombard around current levels. Your target should be around 2085 to 2185. Your stop loss should be around 1900 on a daily closing basis.
Dipan, first half of this year was volatile. It was full with news, tariff, geopolitical tensions. Second half, Dipan, as we roll over from the first half of this year, calendar terms to the second half of this year, what could influence the script of the market, Dipan?
I don't think much is going to change. I think end of the day, investors are focused on corporate earnings, and entire FY 24-25 was a year of slowdown, consolidation. We saw a sharp reduction in the earnings growth of a lot of sectors, a lot of companies. Then we have had the RBI interest rate cut, which was very surprising and positive at 0.5%. We had the budget, which reduced the personal taxes for a lot of individuals, so that should aid consumption. We have had a good monsoon so far, and government policies generally have been supportive. So we are all investors are waiting for the corporate profits to improve in this financial year. And June quarter onwards, maybe June may be soft because I was disappointed with the advanced tax numbers by the corporate sector. But at some point of time, I think around the busy season, post-monsoon, we should certainly see an improvement in demand, in consumption, even in capital goods, and that should aid earnings growth. That's the only way this market can go and break its earlier highs and go to that 29,000 Nifty levels. So we have to wait for the corporate earnings to move up. I think this is only as much that P multiple expansion can take the market higher. So I think a lot of the focus in the next 6 months is going to be on this revival of corporate earnings, and let's see how that plays out. All the ingredients are there, the foundation is there, that earnings should improve as compared to last year, 24-25. But nothing is kind of cast in stone. We need to wait and watch, and we need a more broad-based recovery in earnings to get much higher returns than what we have seen in the past year.
Dipan, with this we let you go on that. Thank you so much for taking the time out and speaking with us this morning. All right, but with this, viewers, let's move on and let's also tell you what's really been happening apart from the world of equities. And first up, after multiple delays, the Axiom